What's up everyone, it's Scotty with MoneyVest. So wanted to do a very quick update on market technicals and also kind of help you understand a little bit on what you could expect in our MoneyVest.com platform over the long time as we keep on adding more data sets and more creative type of analysis in the future. So as always, if you enjoyed this video, find it helpful, please make sure that you drop a like. I would really appreciate that, and subscribe to the channel if you haven't already. The links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all the trade alerts and trade ideas and options alerts as well as over 50 plus trading analysis and tutorials and educational videos that are members only. That's private content, so links going to be down below. So first things first, I actually wanted to go over the indicator that is now hitting its lowest level in 5 years, and that is going to be the volatility. It's going to be the VIX. I actually sent out a message in our Discord earlier today, essentially kind of flagging this and mentioning that it is very, very important that we remain cautious in this market environment because the markets are gapping up quite significantly here pre-market, and now the markets are open just about a minute ago. And if you take a look at the S&P 500, right, so we obviously did open higher a little bit at over 53.32, so we're 0.5% higher. The NASDAQ also opening in at a new all-time high on the back of course NVIDIA earnings, SMH, semiconductor stocks, everything just ripping to the upside on the back of NVIDIA. Which is obviously causing the volatility to come down to its lowest level in 5 years. So if you basically scroll back, and the low for today was 11.52. That was the low for today. If you go back, you won't see this print until you go back to as far as 2020 or basically December 2019. So January of 2020. And then of course we go back to as much as 2019 over here, December of 2019. Actually, we came down to the low of 11.72 was a low back in 2019. The low for January 2020 was 11.75. So we might even have to go back a little bit further. December 2019 was 11.7, and the lowest we got down to was November of 2019, 11.44. So we're quite literally hitting a 5-year low on the volatility. Last time we saw these levels was back in November 2019, and of course we got huge spikes. During that time, we saw a spike in volatility here, 54%, once again over here in 38%, and again the bigger spike here, 60%, and then of course the much greater spike during the pandemic, during the March 2020 crash of over 800% or something, and it got up to as much as 84, 85. So the point is that I think it's really important for us to be cautious and understanding of this idea that volatility is really low. And if I show you the chart over here, 11.62 is 6.79 percentile, which is pointing to a really rare market event because we don't come down to these low levels very often, right? It's a very rare event that we come down to under 12, under 11, under 10. Under 10 would be extremely rare, and under 12 is rare. So under 10, of course, would be 68 times in the last 36 something years, would be only happened less than 1% of the times. And right now, under 12, it's again really rare, 6.79 percentile. So the idea is to remain careful and cautious. Now, this right here is the type of analysis that you can also see in our MoneyVest platform. And what this really is a table that's putting together how the S&P 500 is kind of technically positioned, right? Technical positioning is very important because it kind of helps us understand the different multiples, different metrics for us to look at, overbought, oversold conditions, and technical indicators, and how the Mag 7 are positioned with respect to their equal weighted or specific weighted on the S&P 500. So to give you an example, there's 503 companies in the S&P 500. Companies that are over 60 right now on the RSI are 157. So that's 31%. So about a third of S&P 500 is considered a little bit more closer to the overbought level here at over 60 RSI. At over 50, which is above the neutral range, is 60%. So about 2/3 of companies are above 50 RSI. Companies that are trading above their 200 SMA, so 200 simple moving average, 386, that's over 76%. So 3/4 of the S&P 500 is trading above the 200 SMA, which is extremely high. If you come over to the chart for market breadth, which we take a look at, so this right here is going to be the chart over here. You can look it up on your trading view, S5TH, and we're at 76.89%. And again, you'll notice that this actually is the red range. It's actually the range where we previously have, gotten rejected, and we can expect a bit of a pullback or a correction in and around these levels. As soon as this chart loads up, you will be able to see the red sort of rectangle that we have marked between 80 and 90%, because historically that has acted as a somewhat of an overbought condition in the market, because right now there's only about 24% of stocks that are trading below their 200 simple moving average. Above 50 SMA, we've got 57%. Above 20 SMA, we've got 2/3 of the market, 63%. And this right here are basically stocks that have made a new 52-week high or a new 50-day high, and that are within 0 and 10% of those 52-week highs and 50-day highs. And what you'll notice is that 73% of stocks in the S&P 500, again, 3/4 of S&P 500 right now is within 10% of their 50-day high, from their respective highs here. And then 58%, so more than half of the stocks are within 10% of their 52-week highs, which is 1-year highs, which again is a very, very strong signal. The markets are near a very nice top, in other words, a very nice sort of high or all-time high here. And now if you come over to Magnificent 7, we've got these right here as the weightings, because again, this is 30% of the S&P 500. That's the overall weight of Magnificent 7. And these are the RSI readings for where each stock is. And the ones that I'm flagging right now are the ones that are really concerning to getting up to some extreme levels. We got Microsoft, we got Apple, we got Nvidia, and we've got Google. Nvidia might actually be higher right now. So this right here is coming back to that percentage of stocks trading above their 200 SMA at over 76%. So inside this red rectangle, we've gotten a couple dips. I've marked out the green areas, which is exactly where buying opportunities begin. Dollar cost averaging and being a little bit more aggressive, the risk reward is extremely good in and around these green rectangles, that areas of demand. And again, markets are oversold in those areas. Now coming over to Nvidia very quickly, because we are going to be talking about Nvidia. We've got 10 price upgrades, with $1,400 being the highest price target on Wall Street for Nvidia, which is quite crazy. It's now up 9% on the day, and you can see the RSI, of course, is now 71. So this is already invalid because it's now at 71 at the moment. So just insane amount of momentum for Nvidia, 9%, so much euphoria, and the market cap is now sitting at well over $2.5 trillion. Tesla is quite neutral at 54, Amazon's neutral at 49, Meta's neutral at 47. But the idea is that, again, 4 out of the 7 Magnificent 7 companies are trading near overbought levels, and the entire market also trading technically positioned a little bit more on the higher side. So I think it's really important to remain cautious, not go crazy here, especially when the volatility is coming down to the lowest level we haven't seen in 5 years. I think it's really important to be alert and just allow for the prices to come to us. Right now, we've seen a lot of momentum, and that's been great. I think really take this opportunity to look at what kind of calls you can sell. And of course, if you want to reallocate some capital, if you want to rebalance, and again, take some profits off the table, or de-risk, or lighten up on some of the positions. But really, when it comes to averaging heavily and buying a lot and dollar cost averaging, I think we have to wait until a lot of these metrics and indicators kind of turn in our favor, become more oversold, and are signaling or flagging more on the oversold side, and are green, basically, are better risk rewards for us. So we'll keep you guys updated, everybody in Discord, and this is going to be the type of analysis that you can expect in our platform on moneyvest.com. So that's going to be launching fairly soon, in beta right now, and we're going to be adding more tools and more functionality over time. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like. Let me know your thoughts down in the comment section below. And as always, happy investing. I'll see you all in the next video.